Tariffs and a bigger strategy. Introduction. The American debt bubble and trading deficit is unsustainable. America has been generously offering economic, financial, and military value to the global system while shouldering the costs for decades. Trump's administration wants to restructure the global trading system so that the risks and rewards are shared more fairly with other countries. Many people believe that changing the strategy that made America dominant over the last century will lead to a loss of that dominance today. Wall Street and economists think Trump's goals are unrealistic and impossible to achieve. However, Trump's economic advisor argues that there are powerful tools to affect the terms of trade, currency values, and the structure of international economic relations. Furthermore, Trump believes that America is in a position to force changes today. I believe that people are scared of ending systems that seemingly work well. I also believe economists economists are not the proper authority as this goal completely shatters economic academia over the last century. And I think Wall Street does not support this goal because institutional investors are highly leveraged, and the massive rehaul of a new world order kills their investments. Trump's top economic advisor, Stephen Moran, a senior executive at Hudson Advisors, that's where Jonathan works, is now serving as Trump's top economic advisor. In this role, he is responsible for planning and executing the economic goals for the Trump administration. In November, Stephen Moran published a 41-page playbook outlining the tools and strategies the administration could use, offering both Wall Street and the public a glimpse into how he might guide Trump's administration. So, this is my understanding of what happened and what Trump is trying to make happen. The international trade and financial system has deteriorated substantially over the last decade for America. This is a pain that Bernie Sanders, Barack Obama, and Donald Trump all agree on, that all agree that needs improving. Stephen Moran and Scott Bessent, who are friends by the way, are responsible for planning and executing the new economic world order. They argue the root of the American problems lie in the strength of the dollar and the asymmetric trade policies with other nations. Moran writes that, according to Triffin theory, the country that provides the world's reserve currency, like the US, must run persistent trade deficits to supply enough reserve assets, such as US Treasury bonds. As the US exports these bonds to other countries, it receives foreign currency, which is often used to buy foreign goods. This creates a trade deficit. As the global economy growth continues, the US must run a increasingly larger deficit. This leads to an overvaluation of the dollar and more imports, which hurts the competitiveness of the US production on the global stage. Over time, this results in a growing accumulation of issued bonds. Bonds are debt. And if these debts grow too large, it could erode confidence in the US dollar as the global reserve currency and threaten the American economy. Being the reserve currency also comes with some benefits: somewhat cheaper borrowing, a stronger currency, and the ability to pursue security goals via the financial system. All in all, there are benefits and drawbacks to being the reserve currency. America has been very generous in allowing foreign countries to share the economic benefit of the USD reserve status without sharing any of the burden. Also, America has provided military protection without direct and fair compensation. Many agree that America's past generosity was strategic, meant to establish global dominance. However, the purpose of dominance is leverage, and it's far better for the US to exercise that leverage willingly on its own terms rather than wait to be forced into it by debt or external pressures. Stephen Moran and the Trump administration argue that the ongoing cycle of debt and deficits is not sustainable, and that America is in a position to force favorable changes today. They believe that the U.S. must reclaim some of the economic value it has historically given freely to its partners and distribute the costs and risk associated for a more balanced partnership. The New World Order. Trump's approach is straightforward. If foreign nations want to benefit from America's financial, economic, and military system, they must either compensate the U.S. or share in its risks. Trump is using the carrot and stick strategy. If countries want to continue to enjoy the financial, economical, and defense systems that America provides, then they must agree to America's terms. Otherwise, they get the stick: loss of American protection, high tariffs, and financial isolation. Trump implemented massive tariffs to erect economic borders in the global economy. He has also threatened to withdraw American military funding and presence in regions that do not align with U.S. interests. Additionally, he intends to leverage at the US dollar's reserve status. Moran writes that if the reserve asset is the lifeblood of the global trade and finance system, then whoever controls the reserve asset holds power. This strategy is a complete reversal of the policies that made America great over decades. No wonder people are worried Trump is killing America. There is a growing concern that foreign countries will create a new system without America. However, that is extremely unlikely. America is just so massively ahead and powerful, it cannot just be replaced. Many countries either need or desperately want access to what America has to offer. Regardless, I believe it's time for America's era of generosity to end. That approach made sense after World War II when global influence was still taking shape, and generosity was a strategic tool to expand the West's reach and establish dominance. But today, the world is no longer in a race for rapid expansion. In this new environment, continued generosity often means giving more than we get in return. The choice that foreign countries now face. Foreign nations will still choose to align with America because the benefits of our partnership far outweigh the consequences of isolation. The carrot remains incredibly appealing: access to US markets, financial markets, military protection, while the stick is increasingly severe: tariffs, financial isolation, military vulnerabilities. There are compelling reasons why countries continue to align with the United States. America accounts for nearly a third of global household consumption, making it the single largest consumer market in the world. Its military spending is the biggest and most advanced in the world, and the US dollar remains the world's dominant reserve currency, the lifeblood for the global financial system. For context, the next eight countries combined fall short of America's household consumption. If you exclude China, China is two-thirds of America's consumption. The next nine largest military budgets combined is less than America's military budget. And for reserve currency, there is no alternative that exists at the scale, trust, and liquidity of the US dollar. Simply put, there is much to gain from partnering with America and much to lose by standing apart, and there is no second choice from America. Therefore, The United States holds significant negotiating power to end its era of one sided generosity and push for more favorable terms with foreign nations. America can establish a new world order where both costs and benefits are shared more fairly. Trump is offering nations a clear choice: the carrot or the stick. Either way, America's risk is reduced and economic value is generated for America. One example of an economic value generated by the carrot is the century bonds. There are a number of ways that the Trump administration can negotiate more favorable terms with foreign nations. One idea that is often laughed at are century bonds. The world has benefited, so for some context, the world has benefited from long-term relations with the US, yet they hold short-term US treasuries. Short-term treasuries offer low risk, high liquidity, minimal commitment, and flexible strategies. Also, America is held hostage by nations that hold large amounts of short term treasuries because they can threaten to not roll over the debt. This has allowed foreign nations to experience long term benefit and favorable short term financing over the US while maintaining minimal long term risk. This is not a fair position for America. America gets none of the short term financing benefit while holding all the long term risk. Century bonds flip that dynamic. If nations want to benefit from long term relations with the US, then they need to hold long term treasury bonds. This way, America captures back financial benefits, distributes risk, and is no longer a hostage to rollover threats. The Fed and the nice thing about the century bond is it actually helps the Federal Reserve. Most people know the Federal Reserve has a dual mandate: controlling inflation and maintaining stable employment. But there is actually an implicit third mandate, which is stabilizing the financial system. Century bonds grant far more freedom and control over America's finances. This, in turn, can help control interest rate spikes during times of chaos, such as high inflation or recessions. So, let's say a nation chooses the stick, right? What are the economic values generated by the stick? It's tariffs. The costs of a tariff are split between importer and exporter. Generally, when an exporter and importer each have a neutral balance, then the cost is split relatively evenly based on price elasticity. But as the trade becomes more imbalanced, the country running a surplus is likely to consume a greater portion of the costs generated from the tariff. Given America's massive trade deficit, I think it's more than the deficit of the next 11 countries combined. It is likely that most of America's tariffs will be consumed by the exporters who are running a surplus. Furthermore, America's reserve currency status grants near inelastic demand for the dollar. This causes the US dollar to strengthen and the exporter's currency to weaken as tariffs increase. This is an unfair but automatic way that the costs of tariffs are partially consumed by the exporter's currency buying power. So, the two conditions needed for tariffs to work without causing pain for Americans are: one, a deep enough deficit, a deep enough trading deficit to pass the majority of the costs on to the exporter, and two, the ability to maintain the global reserve currency status. For this global reserve currency status, there is no second choice. And Trump has been implementing more policies to punish those who leave. Therefore, it's possible to imagine a scenario where significant tariffs lead to only marginal cost increases for American people, while foreign exporters bear the majority of the costs from the tariff. And the US government will collect substantial revenue from this. Trump, volatility, and Wall Street. It's worth noting that Moran originally approached these plans with caution, aiming to minimize market volatility and provide smooth transition mechanisms. It seems that everyone was completely blindsided by Trump's indifference towards volatility. Trump's indifference to volatility will trigger margin calls for the already highly leveraged Wall Street institutions, sending stocks plummeting. This is a rare opportunity to make massive amounts of money over Wall Street. Jonathan says Trump is not for Wall Street. Rather, he is for Main Street. That's us. I agree with ignoring volatility. The goal is to generate massive amounts of wealth in the long term. That seems to be Donald Trump's strategy, that's Warren Buffett's strategy, and that's also my strategy. And if we take a look at the Fear and Greed Index by CNN, the market is in extreme fear. It is completely maxed out. It is very low. On a scale of 0 to 100, it is at a 4. Extreme fear. That is ridiculous. All this fear is just speculation about the future. Clearly, America is in a position to negotiate changes, and Trump intends on capturing value and reducing risk for America. I think he is likely to be successful, but for some reason, popular media is calling this the end of America. How to invest? Where's the benefit? Where's the pain? Where's the benefit? Although I think Trump will be successful, Trump does not care about volatility. Therefore, the biggest pain that would be experienced would be the chaos in supply chain operations. As a side note, supply chain budgets have just been freed up. Oil prices just fell 15% last week due to OPEC announcing a tripling of oil production next month. So, supply chains are becoming more chaotic and their budgets got more freed up. They are going to want to solve this problem. Every time this happens, like during COVID, when in COVID, the global supply chain went into chaos and there was a bunch of government funding to try to fix it. Palantir was the overwhelming choice to solve this issue. And today is the same issue. This is exactly what Palantir is good at, and like America, there is no second choice to Palantir. So this chaos will fuel massive growth for Palantir. And just like how Trump wants to reinvent the global trading system, Trump also wants to reinvent the technology of America's government and military. Just like how the head economic advisor has the power to dictate how America plans and executes the reinvention of the global trading strategy, Palantir has the power to dictate how America and Trump plans to execute the reinvention of technology for the American government and military because Palantir is the head technology advisor for Donald Trump. And also Palantir is in top positions in the US government and military. So lots of benefit for moving towards Palantir. All this chaos, good for Palantir. The government completely supports Palantir, and people forget that the AI growth story is still here. AI can still change the world. It failed for everybody else, but for Palantir, it's succeeding. So where all the AI investors going to go? It's going to go to Palantir. The market sentiment is collapsing and institutions are getting margin called, so stock prices are an all-time are just crash our stock prices are so low. So now during maximum fear, during maximum margin call, and with so much growth opportunity this year and every year to come, Palantir is obviously the best choice. Companies like Tesla may or may not succeed because even though the American economy is only 10% of international sales, nearly 50% of S&P 500's market is international sales. So if a trade war ever comes out, a lot of those companies in the S&P 500 are going to do bad. But Palantir will do very well because Palantir, for the most part, is isolated from a trade war. Their biggest clients are governments and militaries. Governments and military, especially American government and military, they don't care about the tax increase or the tariff increase. They will pay for it. It's government contracts don't care about recessions and don't care and it's immune to trade wars. So there is no downside in the next couple of years to Palantir, and it's purely just immense upside. So as always, my suggestions are uh, Palantir, Berkshire Hathaway, and if you're feeling crazy, maybe Tesla or some other company like Costco, Apple, whatever you want to buy, Amazon, right? And then short the S&P 500. That seems to be a well hedged strategy.